Your backtesting session. Currently 22nd of April 2024. So we're in a higher time frame range. We have an unmitigated zone below it. I'm looking for a bullish flip within the 30, 50, 70. So yeah, we already took a protector low. Now I'm just looking for a bullish flip to happen now within these areas here. Oh shit. We get a closure. Now I want to see a pullback into this zone. Now the pullback has to be a body closure below the last up candle. I need to see that first. So we just saw it. Now I'm looking for my wick confirmation. The manipulation move now. And on the 5-second, I'm looking at the most recent S&D responsible. Looking for a new one to be formed, just like that. I must start behind the S&D responsible. And I'll go for 5 points. My stop automatically goes to 2-point profit when it hits 5.
Order filled.
And as soon as I hear ka-ching, that's my time to close my position. So I don't really set a target, but I'd much rather this management style here. It works way better than just setting a target, because there are plenty of times. In fact, backtesting taught me this, that you know price can go to 5 points, and if you're not there to like take it immediately, it can come back down to like 3. And I had a nasty habit of just, I want to see it go back to 5, so that was a way for me to manage. So as soon as price reaches 5 points, I mean, this Ninja Trader's automated, so it knows. So as soon as it does it, I set, oh yeah, here's my ATM strategy. Hold on. Oh no, don't do that. How do I edit it? Maybe it's just because it's, huh? All right, okay. So this is my ATM strategy. So order quantities, your contracts, stop loss is at, so this is 10 point, a 10-point stop. That is what I'm willing to risk for the move. No more than 10 points. But many, many times, like you just saw me with my first trade here, I'm able to reduce my risk, right? And then this is not a 4-point break even. It used to be, but oh shit, okay, cool, never mind. Yeah. The profit trigger is 20. So 20 ticks is 5 points. Let me just actually save that now. Let's put 5. Let's put 5. 5 BE. So yeah, I first started out at 4 and saw how it was, but then I used to get stopped out at break even most times. But usually when price hits 5, it's just got that fling to it. So as soon as you see your stop move up, there's a higher chance of price even going further than 5, and then it's up to you now to hit close. But if you don't hit close, then you'll still be in profit by 2 points. So that's what it looks like. Let me save it as well. Now, in the high time frame range, the fact is that we're still downtrending until we break above this high. So when you see your first move, which was this, I don't re-enter into a move until we take the low again, a body closure below it, and then I look for another bullish flip. That's only because we're in a downtrend. When we're uptrending, when we get there, I'll show you guys what I do. But this is how I trade in a range. And then it's different when you see a higher time frame break out of a range. I used to struggle with it before, but yeah, now I've completely solved it. I have a system for that as well. In fact, I should show you guys. But backtesting, right? So this isn't really about executions and entries. We're here to learn. So look, I'll just break down everything here, right? So where did this start? This started, okay, I'll go through this price action here. So look, this is a swing here, and we see the break above. So when you see the break above, if price breaks above a higher time frame range, then price is currently in a higher time frame uptrend, right? It's going up. So before you even seeing anything here, you're looking for a, where's the last down move? The last down move in this uptrend, we went up again, was down here. You're looking for a manipulation move out of it. It gave you a small move, but that's not really. I think I would have got stopped out. You would have looked for, basically, in here, you would look for your S&D responsible for the break, which most likely would have been there. Let's see. Oh, nothing got broken, never mind. Yeah. Yeah, nothing got broken there, so you wouldn't even had anything there. But when we break out, when you see a body closure below this manipulation, now I call it manipulation, but it's really just a down candle, and you guys will see that I don't count the bodies. I don't count the wicks except for like, so let's say we're in an uptrend, I'll count the bullish wick. All right, so we see a body closure there. Now, if price is in a higher time frame uptrend and closes below the last down candle, then price is currently downtrending in a higher time frame range. Wait for price to trade below a protected low. So where's that protected low? Blah, 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 blah. Nah, that's not the protected low. Well, it is not. So I'm gonna change that wording. Yeah, not a protected low, a valid low. So I consider protected lows. This is a protected low. But a valid low is enough. So this is a valid low. That's a valid low. And a valid low is literally just a bullish flip. That's it. But a protected low is a bullish flip that is basically the origin of the move of the higher time frame break. So it's the bullish flip that achieved a break out of a higher time frame range. A valid low can achieve that too, but you know, this is the origin of it. Right? That's the added term to it. Protected is the origin of that move that broke the higher time frame range. This valid low here didn't really do shit. Yeah, we got the bullish flip. That's what makes it valid. But it didn't really achieve nothing, and then we took it. But that's enough liquidity for us to take and wait for manipulation, move back up to it. Even that body closure above this down candle here is a valid low, valid low. So that's that. So what you're looking for is for price to trade back within the zone. And because we're downtrending, you want to see a bullish flip. Then you want to see a retest into the bullish flip. Then you want to see your manipulation move. So on the 15-second, this is your confirmation. The failure to close below. And then once you see that, you look to the 5-second now and you're like, okay, cool, I want to see the S&D responsible for the break on the left side. Not on the current trend. Current trend is, it's more times than not, it don't work out. But if you wait for the ones on the left side, then yeah, more times than not, it works out. But I was explaining to you how to engage in a trend, in a trending environment, and then how to adjust when price is now ranging. And you know, before I move on, Dave is the perfect person to learn from when it comes to trading in a range. But when it comes to trading in a trend, oh, It was literally just this weekend. This weekend, literally, like yesterday, the day before. I was just like, I was trading. I wasn't really backtesting like that. I was just trading, but I was, it's mad, but I was trading like I had no sense. I wasn't following rules or nothing. I was just clicking buttons, clicking buttons, clicking buttons, clicking buttons, clicking buttons. I was just using the knowledge that I had, but with no structure, right? And I recommend you guys do it too. I usually do it at late night. So at late night, your conscious mind really isn't active like that, and your subconscious mind is really, it's really more apparent, right? You're not thinking too much, and especially when you backtest like me, like throughout the whole day, you know, your mental energy, your capacity to think, it's just like, yo, I can't be bothered thinking, that it's too much energy. That's the perfect time now to not backtest, but just to use all the knowledge that you have and just start clicking. Just hit execute. You're not. This isn't about P&L. This is not about win rate. Your losses, your wins. You're just clicking, and then just now, okay, that happened, that happened, that happened. So you're training yourself to really just, whenever you click, it's a profitable decision. Now that's the stage you want to get to. I ain't there yet, but not only that, you're learning how price reacts where you think you will profit. That's the whole point. You're clicking, right, and you'll start to notice more things now because you're just letting price show you the common behaviors and shit. But I think I went on a tangent. I don't even remember what I was talking about no more. Oh yeah, the whole reason why. Okay, cool. How to engage in the high time frame range. Yeah, cool, 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 cool. But let's move on in it. I want to see a bullish flip and then a retest into it. So that retest, I should word myself better, but word it better. But I want to see a bullish flip after a protected low is take a valid low. My bad. I want to see it pull back into it. That pullback has to be a body closure below the last up candle. So this, yeah, yeah. Let me see. This is like the last down candle here. But now I want to see it pull back into it. And then in a 5 second, I'll look for the S&D move. So we close below that, that's the pullback into it. And now I want to see the candle closes a wick as it trades into the zone. The next candle to actually trade, the next candle has to pull back into the wick. I'm waiting for this S&D to be broken. I'm gonna zoom in so you guys see what I'm talking about. I want to see the next candle like that. I want to see a break now. Now, if it shows me, then I just take it before it's this high here, like that, and then I just put my stop behind the body of the S&D, and then yeah.
Stop filled.
And the reason why I put it behind the body of the S&D is just so I reduce risk to the max. Like I reduce it to the max, max, max. Now, if I see another break of structure, then I'm getting in. I just got stopped out early. That's all.
Order submitted.
Ain't nobody troubling Scott and taking the spot.
Order filled.
And I put my body, put the wick behind the body. Go for 5.
Order filled.
Just like that. Mm, 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 mm. So look, if price pulls back into the last down move in a higher time frame uptrend, then wait for the current candle to close with a wick. Wait for the next candle to pull back into the wick. If price pulls back into the last down move, I'm not gonna include. Oh yeah, okay, cool. So the reason why I even say higher time frame uptrend, which is it's not. I should change the wording of that. But that bullish flip is an uptrend. Price is no longer downtrending once you see this bullish flip happen. So not a higher time frame uptrend, but clearly the high time frame is the downtrend, but yeah, just the uptrend in itself. Now, I really, when you guys are, incorporating, testing each rule of the that I'm showing you guys here, I really recommend that you only focus on one side of the market. Only focus on one side, either long or short. This applies to both, but of course, my strength is bullishness. My strength is taking longs. I can analyze it better, but you can do this on the short side too. Just flip it. You feel me? Invert everything that's on here because this is so detailed that you can't analyze everything. Bro. It's so much for me to process, and you need to create that. You need to be able to make this a habit first on just making sure you got one side of the market down. You've got the one side of the market down, then now you have enough mental energy, mental space to now incorporate counter trending. Now, this was a counter trend move, yes, but I'm talking about like playing both sides of the market. Like if you've got this here at the same time while you're looking for a long, like it's too much information to process. Like it's way too much. So I recommend that you guys only focus on one side of the market because trust me, bro. Listen, I'm at 2x speed. Look how many trades that I've taken already. I think like 3 already. But bro, like it's there's an abundance of opportunities, even if you just stick to one side of the market, G. Abundance. Now, when you see, I only take this move here. Once I see my move and I take it, or let's say I don't even take it, and I see price already heading up, I don't look for another entry until we take another validated low, a valid low. This low becomes protected when we break out of the higher time frame range. And the protected lows are the lows that tell you, well, in this case, protected highs are the highs that tell you, look, this is the trend, the higher time frame trend. Shit, we didn't even break. Oh, we did. Okay. But I will start. I will explain the short side. So look, check it. So let's say if you were shorting, right? This would basically be your setup. Now you'd wait for price to pull back into this zone, and when price reaches this zone, you would wait for your like the manipulation here. So the wicks I was talking to you about, and you see these wicks everywhere. I'm gonna show you. Let me just see though. If it gives me the opportunity, then I'll show you guys. That failure to close above is what you want to see. If you don't see that, then there's no confirm to get in. And then from here, you just wait for your last up move. So a bearish flip now. Now you want to see a shift in trend. So essentially, when you're trading, you're only trading in the direction that. So let's say you're longing, you're only trading in uptrends. Only. You feel me? You're waiting for price to be. So in this case, you're shorting. So you're someone that's only shorting the market. You're only shorting a downtrend. And that bearish flip will tell you when that downtrend happens, and then you wait for a pullback, but that pullback has to be a body closure above the last down candle, right? We get that, but we get a body closure above the, oh, not yet. All right, let me see the S&D. I'll still take it if I still see that S&D break. So I told you guys, I still count the wick here. But usually I only pay attention to the bodies to determine my breaks of structure. If we, oh shit. Yeah, that's better still. That's fine. So this is how you don't get, how do you call it? You don't get tripped up. Because this is what used to happen to me very, very, very often, where Yes, price is in a zone, but it doesn't mean that price, just because price is in a zone to the left doesn't mean that it's in a reverse. So you need to pay attention to your right side too. Now you can count your swings too. That's cool. Definitely do that. That's what you should be doing to determine, okay, cool, we're in a zone to the left. So if we are like 4 to 6 swings, then cool. But then at the same time, you can count your swings, but then you need to now, how do you get in at the very top of the move? You feel me? Because you can count your swings, but then you don't know how to actually engage with it. So waiting for that bearish flip is your first sign to engage with price. You wait for it to pull back in, but like I said, that pullback needs to be a body closure above the last down candle in this case, and then you'd wait for your confirmation, which is the wicks, the failure to close above. Likewise, if you're bullish, you'd wait for a failure to close below. And I'm going to show you guys what those wicks look now. Literally, they happen all over the market. Just look at every single turning point. I'm going to erase this. Look at every single turning point in the market. This happens on both sides. What did they all show you? I don't know, can't see it there, but it's definitely there. Like if I just zoom in, look, failures. You don't see, you just see a single wick there. You see a failure to close above and it goes down. You see a failure to close below and it goes up. You see a failure to close above and it goes down. You see a failure to close above and it goes down. You see a failure to close below and it goes up. You see a failure to close above and it goes down. So this confirmation is everywhere in the market. Look, I'll even stress it. I'll even go all the way back here and just do it, just so you guys can see. A failure to close above and we go down. A failure to close below and we go up. Failure to close below, zoom in. Failure to close below and we go up. Failure to close above and we go down. Failure to close above and we go down. Failure to close below and we go down. Go up. Nah. Failure to close, look. So this happens everywhere. And when I was backtesting this, you know, don't go down this rabbit hole of, okay, cool, whenever I see it. Now it's just about where you see this now. Because now this is a mechanical process and structure, right? Now, when it comes to mechanics, that can get you up to like a 50% win rate. But I'm telling you, that's not sustainable. Now you need to know when to use this confirmation now, right? Where should this be placed? Where do you want to see it? Because it happens everywhere. The market's already telling us that, yo, this happens at literally every single turning point. If the market wants to turn, this is the sign that it shows before it turns. At the very start, the origin, the start of the trend. That's why you see that, you know, my wicks, you can barely see them because I pay attention to the bodies when it comes to me analyzing structure. So it's easier for me to see. When it's like the same, like transparency, it's just very hard for me to focus on the bodies. So we're currently in an uptrend. We broke out of a higher time frame range. This low is protected, and now literally, I'm on the 15 second. Let me erase everything, bro. I'm on the 15 second. But literally, what you see, every single bullish flip that you see here is a wick on the 1 minute. But that wick on the 1 minute is also a wick that put in a high. So I even told one time in my live stream on YouTube, I showed you guys that literally this signature in price is a wick on a higher time frame. A candle going down, candle going up. And that's a bullish flip. on the 15th second. And that bullish flip is the last down candle. So literally every last down candle that you're seeing is a wick, right? And you're waiting for price to tap back into the wick. And now you're looking for on a 5 second the confirmation that price actually wants to go higher. So you see how mad fractals can get. Do you see how mad fractals can get? Yeah, I can't lie, I had to check OBS, bro. I thought my mic was still muted. But yeah, man. Right now we're in an uptrend. So look, this is how you engage in uptrends. Where's the last? Oh, if we get body closure here, we're in a range. And then you would look, oh, we don't get a body closure. All right, cool. Let me see the 5 second. I already know where I want to enter. Oh, we got a body closure. Okay, cool. So look, when you see a body, look, it's literally written here. So look, check it. If price is in a higher time frame uptrend and closes below the last down candle, then price is currently downtrending in a higher time frame range. Wait for price to trade below a valid low. Where's the valid low? Right there. After you wait for price to trade below a valid low, if price breaks below, let me change the word in here. A valid low in a higher time frame range, then price is currently accumulating in a higher time frame range, right? So that's literally video 9 of the original masterclass. Whenever we break below a higher time frame low, we're in an accumulation. Same, if you flip it above a high, what's it called, a valid high, you're distributing above, right? So when you see that, you want to wait for a bullish candlestick flip within the 30, 50, 70. You feel me? Now I want to see a body closure above this high. Let me get rid of this. Whoops. Bro, I literally be clicking everyone into trader, bro. Like, still gotta get used to it, but now you've got a little range here. You see how we had a body closure above the last down candle, meaning that this low is now valid. That means we can use this as a range too, but this range will just be on a smaller time frame, but it's still valid though. So if this gets swept and we see a bullish flip, because that we're now in a range by the time we run this low, right? See a bullish flip in here, pull back into the flip. Now we see our wick confirmation that I showed you all over the chart, right? You look at the 5 second, you see your S&D responsible for the break, you go in. I want to get to 600. The last down candle. Scroll. Hey, nigga, I really dream.
Fucked up, baby. Got like 4 ounces in the 20, bitch. I did a lot of shit just to live this here lifestyle. We came straight from the bottom to the top of my lifestyle. Nigga living life like a beginning. This is only the beginning. Nigga, I'm on the top of the mountain, puffing on clouds, and niggas still beginning. $1.5 on a Visa card. 100 bands, still look like some fucking ties. Niggas serving great white like I'm feeding sharks. I won't do nothing with the bitch, she can't even get me high. Something wrong with the pussy. Even though I ain't gon' hit it, I'ma still make sure that she does shit. Me and my rally don't get caught up like that, no way. We ain't got time to go see doctors. Jay, hey, send money. Put my paper up on the bitches yawning. Hey, this a show, bitch, I'm performing. I do this shit for my daughters and all my sons, bitch. I'm on the going out like no idiot, I'm a OG. I done did a lot of shit just to live this.
Yo, by the way, when you count your swings and you see that we've been uptrending without no breaks of protected lows, so we just had our first break of the protected low right there. Now, the first break is usually a liquidity grab, and then for us to trade higher, creating a higher time frame swing. A swing that's on a high, basically on the same time frame as this one here. So it doesn't happen all the time, but definitely that's why you want to focus on one side of the market. Price could just come down here, or it could just go up and then come down, or it could just go up and then continue trending up. So yeah, pay attention to that as well. So definitely, let's say you're someone that's looking for a short and you see 4 to 6 swings and you see the break and you're like, oh shit, okay, cool. We're now in a downtrend. Pay attention to the first break, can get liquidated. So you want to observe it. Hold on, I even got it here. I'm on top and I'm not done. Okay, cool. So if price creates a 4 candle dump, it's basically 4 to 6 swings, but on candlestick structure, right? So if price creates a 4 candle dump and a valid low, so let me put it in terms of this. If price creates a 4 candle pump and a valid high right here, then wait for the violation of the valid high. And then wait for the manipulation above the valid high. So that's how you engage.
To the top of my lifestyle. Uptown, so swagged out. You heard me? Life like a beginning. This is only the beginning. Hey, big toe. On the top of the mountain, puffing on clouds, and niggas still
You understand me?
beginning.
Yeah, nigga. Just in the middle of this ocean. Pacific, that is, nigga. You understand me? Bunch of bad bitches. You heard? Popping that GTV. You heard? Living that lifestyle. Yeah, I do this for Miss Gladys, boy. 100.
We got London on the track.
Order filled.
You was faking it all along. Feel that shit inside my bone.
Had a feeling you had told when I felt it in my soul.
And you know your word ain't strong, cause they know you getting old.
Ever since I've been on, we get it trenches hope.
Yeah, keep it a buck and ain't nobody fucking with us. I can't sit around and talk about other niggas. That shit all don't care what he did. We was cool, but it is what it is now. Broke his for used to live in my man's house. I work hard, they ain't give me no handouts. Bro ain't really a hobby, just fanned out. Can't believe we just slept on the same couch. How you feel like
Order filled.
We had spots in the hood, make sure everyone good. Be that bitch for 2 months, then we change out. We could be anywhere, we gon' bang out. If you see me, they pay me on hangout. I got too many cars, need a bigger garage. Call the realtor to tell her to change out. This shit deep, I take care of my kids, side of their family. I'm too rich to let somebody handle me. Now for real, I pay rent for my young niggas, mom and them. We got away on the chase, I was one of them. Pay attention to me, you can run it up. Ain't drove me.
Okay, cool. So look, in a trending environment, if price breaks above a high time frame range, that's that purple line over here, then price is currently in a high time frame uptrend. Wait for a manipulation move within the last down candle. As simple as that. And the manipulation move is literally just this. If price pulls back into the last down move in an uptrend, then wait for the current candle to close as a wick. Wait for the next candle to pull back into the wick. And this is literally my entry, right? If price pulls back into the wick, then wait for the violation of the S&P responsible. Wait for the pullback into the new S&P responsible. Enter the new responsible. Stop behind the new S&P responsible. Profit at 4 points. So when I say profit, Yeah, 5 points now. You guys saw in the beginning that I changed it, right? So as soon as price hits 5 points, your ATM strategy should automatically put you into 2 point profit. So that takes care of your commission and some, right? Because price moves so quick, there's times where it can get to 5 points and come immediately back down. And your reaction time, your click of the finger, your trigger finger, it's not fast enough to really interpret that. And there's lag too. I'm here backtesting, but trust me, when you trade live, this isn't the case with Rhythmic. But I know when I trade my own broker, Ninja Trader, on my live account, there's a bit of lag. So you want to make this as automated as possible. That will really help you. So if I'm going to show you guys a 5 second now. Boom, 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 boom. And that's my daily goal met. $600 in a day. Just like that. And I start trading at 15:30. That's within an hour, bro. So this is the 5 second. And I entered over here. So boom, the S&D responsible for the break is there. See this high over here? Now I'm paying attention to the bodies right now. See the S&D responsible for the break. Boom. I just tap right in. Now, I don't. So you see, it's not like I'm disregarding these wicks here. I know that they are still important in price. So when price breaks above the body like this, we are still inside the S&D responsible. Technically, because this is the whole down move that broke structure. But of course, when you're looking at the bodies, when you see the bodies, this is the down move responsible. But as for everything now, the whole price movement, it started here. So when I see the body close above it, I just execute. Because you usually see some shit like this. Price will leave you if you consider the wicks. And you'll have no chance to enter. So I was like, okay, cool. Dave also taught that the earliest indication, even though it's more risky, but I've now made it a way where it's not even risky at all, right? It's a high probability thing. But the earliest indication of a break, right, of the S&D responsible is the bodies, paying attention to the bodies and not the wicks. So that's what I did. And you guys saw that. Let me see the this is the 25th, right? 80%. Again. So that was actually a good session right there. And I'm literally about to trade in I start at 15:30. You guys can see the time. I got like 10 minutes left, so that was cool. That was a cool session. Now I try doing my best to really explain price at the same time as I trade. I told you guys that I'd be doing that, and definitely if you guys thought this was helpful, or if you guys thought that there's probably some improvements that I can make, any questions that you guys have, anything that you want me to dive deeper into, then definitely, bro, ask me, bro. Ask me. Ask plenty of questions. That's the fastest way you're gonna increase your understanding. Any question, no matter how stupid it is, ask me, bro. Like, I don't care. I want you guys to get this shit. So, yeah. These rules here, as you guys can see, like, I'm in the process of trying to put my rules into a language that's just fixed. Now, I'm not there yet, but this is pretty much it. Probably the next backtesting session, you will see the language would have changed. It's still the same thing. Like, I still trade the same way, but, during my sessions of refinement, there's little details in which, okay, cool. Like, you guys, just the whole meaning of protected and valid, just those little details there, even though it's very small, but it can still impact your decision making. So you guys see the video here, you can just copy it. And I recommend that you guys backtest each thing first. Backtest one thing at a time. Don't backtest anything more than once. So basically, if you want to backtest these rules, right, backtest the current trend only. No entries. Just see this over and over and over again. Build conviction in yourself that, okay, cool, yes, when price breaks above a higher time frame range, it's currently in a higher time frame trend. And if I wait for a manipulation move within the last down candle, then, observe it. Observe it first. Don't take entries. Don't take entries. Don't take entries. Just observe it. You feel me? Because I'm already giving you guys a super fucking precise. This is more precise than Dave's. Dave only teaches how to trade in a range. Now I'm telling you guys how to be involved in a trend too. And if you guys see in my last on my YouTube channel, there's times where I talk about, I'd much rather prefer trading in a range because I don't know how to trade in a trending environment. I'm telling you I'm telling you how to trade in a trending environment right now. So, bro, look, we're always evolving. We're always learning. We're always learning. If you guys see what my trading, go look at my YouTube channel. Now, when I started my YouTube channel, I was already pulling money out of the market. You will see it's so fucking different. But though it's different, the foundation is still the same. And what's the foundation? It's structure. I hope you guys enjoyed this video and yeah, man. Yeah, fam. I'm out, bro.